7. My name is Niharika Walia Bhatnagar and I am with you with the area of accounting and financial management for bankers. Okay, so today I'll be talking about journal. But before understanding journal in detail, we'll be talking about the rules of journal. So let's quickly understand the term journal. Okay, so when we talk about recording the books of accounts, as I told you, as per Luca Bartolomeo Piccoli, he says that when we record the books of accounts, we record the books of accounts as per double entry system. Double entry system means with everything that we are recording, everything that we record is based upon the fact that we have double entry system is basically we have one side and the other side. We have two sides of every journal entry. According to him, he called them debit and the credit. So DR was basically debit and CR is basically credit. Written that way because it is believed that the DR term is taken from the Italian word debere, and the second one was credere. There's another saying that this is debito and credito as well. So there are multiple theories. So according to the accounting scenario, they defined this particular area as LHS is equal to RHS. The right hand side and left hand sides are equal. If I put 10 rupees into the business, I can spend 10. If I have 10 rupees, I can spend only 10. Isn't it? It will never be something I have got 10 rupees, I spend 12. It can happen. So first of all, I'll have to take a loan of 2 rupees. I will make it 12 and then I'll spend it. So how can we define the term journal? The primary records of transaction is the journal. Journal records these particular elements in such a way that is recorded between two different aspects. A journal is what when we are recording these things in individual entry, that means only purchase, only sales, when we are recording it that way. So the journal is a chronological record of all the transactions showing the debit and the credit of the accounts. The journal also contains a narrative description. The point is the particular books of accounts or the journal entries are also read by people who are not from the accounting background, or they want proper details. If there's any check number, specify any specific account number, note it down, or any specific person who has given you that particular thing, so you have to note down the name as well, right? When you are recording all these things, you write the theory of that transaction. That is what they call as description. So you have to explain the same. Now comes the area. How do we specify this area, everyone? It looks like this. I hope it is visible now. First of all, you will write the actually this is for the ledger. Let me just specify the journal first. This is for the ledger. We'll go on to the area of ledger, but not right now. The first level is always journal. So now taking you to the area of journal first, right? So in this case, what do we do? In terms of journal, we have a specific format. The format says it is always in a chronological order. First of all, we write the date. Chronological means in the sequence of the happening of the event. Then we have particular. Then we have ledger folio. Then we have debit side and the credit side. Debit and credit, it's all set. In this case, what do? They write it in the sequence of the date. Right? Date wise it goes. And in terms of particular, what they do is they write the element of debit here and the element of credit here. The one which would be debited would be shown as account debited, and the one which is on the credit side would be shown here. They write it this way so that you can easily distinguish between the debit side part and the credit side part. Whatever would be on the debit side, the amount will be shown here. Whatever would be on the credit side, the amount will be shown here. In this case, I'll always say if I put 100 rupees into the business, I'll spend 100. So the total will always match. And to describe the journal entry, they put a little part here which they called as narration. So this particular portion is called narration. Done. So that's how we show the journal amount in the books of accounts. I hope this is clear. This is the format of journal. Each and every transaction, that means sale, purchase, or sale, purchase, expenses, incomes, everything is recorded separately. It's just like maintaining a diary. We are going to note down that this happened, then that happened, then happened. So we are just keeping a sequence of individual things that are happening around. So in order to note it down, they said there are two ways of working. One was basically it started from Italy, then it started going through the area of Europe, and ultimately English gave the ultimate version, which is called the traditional approach. Also called English approach, also called golden rules of accounting. While the second one is approaches are modern approach. What do you mean by modern approach? Under modern approach, we have the area of in the modern approach, we have the American approach. That's the American approach. Okay. This is American approach. American approach is a little easier. Traditional approach requires to understand a few terms and terminologies. So I'll be starting with those terminologies first and then we will move on. Right? Okay. So these are the various approaches that we're going to talk about. Let's look at it now. The first thing, in terms of accounts, they defined as accounts into two parts. One is personal account and the second one is impersonal. The English approach, or also called the British approach, also called traditional approach, also called golden rules of accounting. They define it as the accounts are of two types, personal and impersonal, which relates to the persons itself. Real person, not there is a person who is living, the person who is basically that will also include partnership and even company, because they are also considered as a person. No doubt they're recording, they can be recorded as something that they are not individuals, but they are still persons because we do business with the company now. Right? Now, how do they put it in the books of accounts? They put in the books of accounts in such a way that if it is personal, so personal can be stated as something which is related to a person. It can be you and me, and it can also be a company. Now, in terms of person, we have you and me, natural. Like that is, we can say that Mr. A is a person. Mr. Ram, Mr. Sham, Mr. Mohan, all these are persons. So the first thing that comes here is that, or there are, the first thing is to note down the natural persons. Acha, after natural persons, what will happen? First is this. Second is what then? First is natural person. What about Tata? Tata Consultancy. What about Reliance? These are companies. I can have a partnership with you as well. Right? So when I can have a partnership with you as well, then what will happen? Maybe Mr. P and Mr. R are forming a partnership. It is also covered under artificial person. Next is representative person. Representative means which is related to the previous year or the current or the future year. That means it is not related to the payments which are making this year. This is not related to this year's payment, but pending payment of the past or any payment of the future. That means outstanding expenses, right? Or income which is not received yet since it belongs to the past. That is called accrued income. Future payment received or paid, prepaid expense or pre-received income. Again, it's all about the timing, not this year, but the year that has passed or year that is here to come. So based upon this, we will find out the value accordingly. So one is natural, second is artificial, third is representative. So we have got these three different accounts, right? Then comes the area of impersonal account. First part was this. What is the second part then? First part is personal account. Once we are done with the personal account, it is related only to the persons altogether. Once we are done with this, with the persons altogether, the next part is when it does not relate to persons. Second is real account. Real means assets. What are assets, everyone? We have talked about it in the earlier case as well. What are assets? Asset is something that helps the business to grow. Okay? That is something that helps the business to grow further. How does it help the business to grow further? We find the value in such a way that ultimately real is basically something that helps the business to grow in such a way that, okay, I am a stationery organization. I have a stationery shop. This shop is something that I don't sell and earn money. I sell goods by keeping those goods in my organization. Right? I'm keeping it in my shop and selling those goods and earning money. Basically, I'm not selling my shop. I'm not selling the rack. I am selling the goods there. Isn't it? So can I say that real means anything that in terms of business it helps to grow? Right? So in this case, it can be furniture, it can be plant and machinery, it can be land and building, even cash. So in terms of real accounts, those assets which can be touched are called tangible. These can be touched, they are called tangible. The ones which we cannot touch at all are called intangible. Tangibles are the ones which can be touched. For example, tangible can be land, building, cash, machinery. While in terms of intangibles, what do we call intangibles there? Intangibles are something which can be stated as goodwill, patents, copyrights, trademarks. है ना? If I have any goodwill, any patents or any trademarks, we cannot touch them. Can you touch goodwill? No, you can't. Can you touch trademarks? No. This is basically the logo of Order 24/7. Now there's a copyright. Nobody else can use it. Isn't it? That is what we call it as intangible. These are kind of rights. Next is nominal. Nominal would mean what? Nominal would mean anything that relates to expenses and incomes exclusively. So I'm just clearing it all up and now explaining only the nominal. Nominal means all the expenses. Okay, explaining again. First was personal, that was related to persons. Real was related to all the assets, while the nominal accounts would say all about expenses and incomes. This is the rule of personal, real and nominal. Done everyone? Got the idea? So now can we say that personal was all about persons, natural, you and me living, artificial about companies, and representative, the payments of the past or payments of the future, receipts of the past or receipts of the future, they are covered under a representative. Real is all about assets that helps us to grow. That would include what? Tangible, which can be touched, and intangible, which cannot be touched. And then is nominal, which includes all the expenses and all the incomes. Now, the next point. This is the American rule, everyone. This is, I would say, more simpler when we talk about the learning. See, the golden rules of accounting, whatever we did till now, that part is really important. This is the basic classification according to them. So this classification was ultimately used for the rules further. So I think let me just tell you about the rules as well first. Why are we putting it that way? I think that will really help you to understand what are we doing and why are we doing it, right? So I'll just let you know about the same so that you can actually understand why are we putting all these particular things all together. They said that there are certain things that would be debited, certain things that would be credited. There is no specification why, what, wherever. Those explanations are there once you get into the details of these accounts. Till then, these are pure formats for you. They said that why are we learning all this debit the receiver, why are we learning about personal, why are we learning about real, why are we learning about nominal accounts, why is this classification altogether? This classification was sole introduction in such a way that they wanted that we understand how do we classify these things in terms of various rules. So let's talk about the rules as well. The rules clearly said that personal account, when we talk about the person, when we are relating to a human there, when we are talking about a company, they said for them the rule is you put the person, receiver on the debit side, giver on the credit side. Receiver who, giver who, the person who gives to the business is called giver, the person who takes from the business is called receiver. So everything is from the point of view of the business. So personal accounts are used to explain the topic of debit the receiver and credit the giver. So let's repeat it again. Personal accounts are those accounts which are related to humans. It can be related to the past or future income that we'll be earning, and it would also include the area of representative accounts as well as artificial persons account. Then after we have this debit the receiver, credit the giver, this was exclusively for personal account. What's the next? Next is real account. Real account is all about assets. Whenever you receive an asset, you put on the debit side. Whenever you lose an asset, you put it on the credit side. So it is like debit what comes in and credit what goes out. That's the rule. Done? So debit what comes in, credit what goes out. So this is the rule for assets. And the last rule is for nominal account. Debit all the expenses and losses. Credit all the incomes and gains. So can I just make it a little simpler? If someone is giving you money, then it's a burden on your head. So he would go on to the credit. He would get burdened with it. Na? When things are going out, out is on the credit side. That is for real account. Just learn one part, everyone. The second one can be learned. Personal account says debit the receiver, credit the giver. Real account says debit what comes in. Whatever is coming in is on the debit side and going out is on the credit side. Then comes nominal account. They said you record the expenses and incomes, but in such a way that expenses are shown on the debit side and the credit side is for incomes. Now, people were having problems in learning these things according to this area. That is personal, real, and nominal. Sometimes it turns out to be a little difficult. So, what do? So, in this case, the next thing that we can do is we can classify it simpler. The simpler classification is this, everyone. The first and the foremost classification here would be the American or the modern rules of accounting. This is the good part of it is the method can seem as if it is different. The method is different, but the answer for both the cases will never be different. In both the cases, the ultimate answer will always be the same. So let's understand that when we talk about the different types of accounts, they, according to American rules of accounting, they believed in the certain terminologies. They said there is something called cradle. Let's come up and talk about all these topics individually. C for capital. The money that I invest in the business is called capital. Then comes revenue. That is, if I put a lot of money into the business, what's the reason? Why would anybody put their hard-earned money into a business? Why? They would put money so that they can earn revenue, right? Next point is assets. How do we define assets, everyone? Assets can be defined as something that helps a business to grow further. So, in this case, can we say that capital is something that I put into the business and revenue is for which I am actually putting so much of money, and assets can be defined as something that helps us to grow. This is not something that I sell, but if I do not earn an asset, how can I sell goods if I don't have a shop? I need a website, then website is also an asset. Then comes drawings. How do we define the term drawings, everyone? Drawings simply means anything that can be stated that drawings is basically the money withdrawn by the businessman for personal use. You remember the business entity rule? Business entity rule said that if A and he has a business called A and Company, whatever money he puts into the business is called capital. Whatever money goes out of the business is called drawings. When he is putting money into the business, it's called capital. The day he takes the money out of it, it is called drawings. Done? So this is drawings. The amount that we use for personal uses, not for the business use. It is taken away from the business. Next is liability. See, capital is my own money, but sometimes I believe my money will not be sufficient. In case my money is not sufficient, what will I do then? If my money is not sufficient, then I will take the money from someone else. So this is basically my borrowings. Okay? That is called borrowings. And why would we put so much of efforts if we are not spending? We cannot grow. So expenses outgoing of the cash because of some short-term thing. For example, I bought a pens. For example, I paid the wages to the laborers. For example, I paid for the repair work. All those things are covered in this now. Got the point, everyone? So in this case, can we specify that we have the term cradle? C for capital, R for revenue, A for asset, D for drawings, L for liabilities, and E for expenses. So if I have to specify the ones which are opposite of each other, if you have capital, then you buy assets out of it. If you, acha nahi, better example. If you bring money to the business, it's called capital. If you take money out of it, it's called drawings. if you have assets in the business, the one that helps the business to grow, there are certain things that lead to a lot of liabilities on the head of the person. Liabilities means he has to pay a lot of money in the form of loans and everything else. And this becomes that way if the business is not vigilant about that particular point, that if they have to pay somewhere, can they pay or not? If they cannot, then they have to take the loans. And last one, I'm regrouping it again. Capital is equal to drawings. When you bring money into the business, it's plus. When you take the money out of the business, it's minus. When you earn revenue in the business, it's plus. Expenses are minus. And the last one would be, if you want to generate something, you need a liability, and this will lead to an asset. Basically, the crux of the story is when you bring money to the business, it's called capital. If you take it out, then it's called drawings. Then revenue, if you want to earn revenue, you'll have to spend money first. So if you're spending the money, that is called expenses. When you're gaining, it is called revenue. Next is liabilities is the burden that I have bear on my head because I am supposed to pay to the certain person after a certain period of time. That is liability according to me. But then to waive off the liability, if I've got something is in the business, that is what we can call it as. That is called asset. So in this case, can I say that when you're trying to look forward to it, and they say that how do we remember it? They said what the best way is, you divide these into two different teams, debit and credit. Debit side said I will take aid, that is assets, drawings and expenses. While the credit side said that fine, then I'll take the LRC or LIC. That is, in this case, the correct answer would be in this case it is liability, then revenue, then capital. While on the aid side, we have assets, drawings, and expenses. Because if we have these things, the business is fine. Right? So, this is the entire classification. I hope you have learnt about the classification, and we can move on towards the area of the MCQs. Chaliye, now let's understand it. First MCQ, everyone. The first MCQ says decrease in the amount of creditors results in. If we are reducing our creditors, and what else would increase or decrease? It is increase in assets, increase in cash, decrease in cash, or no charge in assets. If I go to the market, what will happen? I will make the payment and then I don't have to make the payment in future. So decrease in the amount, I am making the payment to the creditor, and technically I am getting rid of the creditor right now. How do I get rid of it? To get rid of him, we need to look forward towards the area of giving cash to him. So technically, decrease in the amount of creditors would result in what? It would cause decrease in cash. There is a creditor going away. If we are giving money to them, so in this case, what will happen? This will decrease in cash, right? The correct answer is decrease in cash. Next point, which of the following is called the basic accounting equation? We have talked about this earlier as well. Capital is equal to assets plus liabilities. Capital is equal to assets minus liabilities. Assets is equal to liabilities minus capital, or liabilities is equal to asset plus capital. When we talk about the accounting equation can be set as something where assets is equal to liabilities plus capital, right? So whenever I build an asset, it's based upon some money that I've borrowed from others and the some money that is based upon my money, right? So in this case, what will happen is, if we talk about this, they have either capital or liabilities onto the left hand side. So what I can do is I can try to look forward towards capital. So in this case, what will happen? Then so in this case, the correct answer will come out to be assets is equal to liabilities plus capital, which would simply mean that whatever our assets are, we will record it accordingly. That means whenever we are recording it, it would be based upon assets is equal to, no, this is not there, assets is equal to, no, capital is equal to assets minus liabilities. Yeah, we can take it up. See, assets, when this liabilities move towards this area, it is going to be plus will become minus and the capital will stay here. So this displacement can be accepted. So capital is equal to assets minus liabilities. The correct answer is B. Next point. Goods taken from the business for personal use by the proprietor should be credited to drawings account, capital account, sales account, and purchase account. If the goods are taken from the business for the personal use, that means it is taken for his other than the business use. That is clear. That means this is not used in business, and they are asking where should we put it. Asha, this particular question is little advanced, but let me just give you a brief about it. Then if I use this for my personal purpose, so basically I've got drawings in my business. One element in terms of this journal entry would be drawings. But what are we losing, everyone? Am I not losing goods? I am losing goods. So it would be noted as two purchases. Whatever I purchased, I didn't sell it. Rather, it is going away from the business. So we will always record it as drawings, two purchases. And the question they are asking, which portion would be credited? So in this case, it would be credited to purchases because we are losing goods. Whenever we purchase goods, we call it purchases. Whenever we lose goods, we call it sales. So in this case, the correct answer will come out to be purchases. Okay? Done, everyone? Okay. Now let's look at the next question as well. The next question says the life insurance corporation account is nominal account, artificial account, representative account, or real account. If I look at exclusively the LIC, life insurance corporation, it's basically an organization which is a company. So if it's a company, it's an artificial person. It's a person but an artificial one, right? It's an artificial person account. Prepaid rent is, I hope you remember, if anything relates to the past year or the present or the future year. What will you call it? Prepaid rent. The prepaid rent is the rent that we have paid in advance. For the upcoming year, it is already paid. I'll call it representative account. So it is representative person account. Anything that relates to the past or to the future. So prepaid rent is B. That is representative personal account. Okay? So that's it for the day, everyone. I hope this was useful. So if you're looking forward towards the JAIIB classes, in the future even I'll be continuing with this topic. We'll do a little more of the working there. We'll be practicing all this topic a little more because this topic seems to be easy, but it becomes difficult. When you are doing it, it is always better you note it down. either you are doing it from the business, from the website, or you are doing it with me on the YT sessions. In both the cases, you should definitely go ahead with it. So first of all, we have the JIB and CIB. What you need to do is go on to the area of JIB and CIB. Here you can find it out, and you can see in the area of JIB October 2023, you will find at this point of time Mahapack double validity is going on. So kindly check it out on our website or in our app for further details. Rest, when we talk about our batch, it is Sankalp batch 3 that is just about to start. It is starting from today itself, that is starts from July 24th. So you can look forward to this particular batch, which covers PPB, IE and IFS, AFM as well as RBWM. Plus, if you are looking forward to it, you can always purchase the Mahapack. The Mahapack contains all these details. That means it contains live classes, it contains the test series, ebooks, videos. It also will have mega marathons, or it will also have mini marathons, or then at the same time it will also include bilingual and English medium batches. Test series is already a part of it. The previous classes that are already held, the future classes that would be held, everything would be open for you. It's inclusive of the revision series that would come up just before the examination. So everything that you can look forward to in this examination will be provided to you by clicking on the area of buy now. Use the particular code flash77, then you will get 78% discount, and that would be for 6699.90. So kindly go ahead and check it out on our website or in our app for further details. I hope it's visible right now. The cost would be 6699.90. And look at the validity, everyone. The validity is for 1 year. So if you're looking forward to it, then kindly check it out. Along with this, if you're looking forward to the course, you can also take up the Mahapack, which is for both JIB as well as CIB. One single payment and you can get the entire batch all together. Let me just show you the details here. So this is the JIB CIB Mahapack. In this area, you will get all the Mahapacks, and along with that, this is offices of the Mahapack. Under this, what has been added? This include your JIB, CIB, then even the certified the papers that you might be looking forward to, the promotions, and as well as the IBF certifications, plus you will also be covering the bank promotion. So you have got 4 areas: JIB, CIB, bank promotions, and IBF certifications. So if you're preparing for any of them, then kindly go ahead and check it out on our website or in our app for further details. You can use the code July, this was flash77, and you can get the particular discount. Okay, you will have to, on this area you won't find that particular thing. There's already 75% discount going on, so you can look forward to it. So kindly check it out on our website and our app for further details. Okay, this is for 2 years already, so purchasing it would be definitely beneficial for you. So if you're looking forward to it, then kindly check it out on our website and our app for further details, everyone.